He's going to run the panel. He's going to run it as a general session. And then we'll take 10 minutes after this session to spend some time with Tom Jessop. He can tell you a little bit about what's going on at Fidelity and get some specific questions. So with that, I'd like to have Peter come up and bring his team.
Revolutionize, dramatically alter, groundbreaking. These are terms and phrases and articles that appear in magazines such as Forbes and in pieces written by representatives of financial institutions about blockchain technology and its potential impact on securities trading, the trading of digital assets, and clearing and settlement of transactions. Hi everyone, I'm Peter Waltz. I'm an attorney at Polsinelli. I practice at our firm's securities practice group, and I'm a member of our FinTank and regulation practice team. We're up here today to talk to you guys a little bit about, go figure, electronic trading and custody using blockchain technology. The trading and investment management industry in general, and firms focused on the trading of digital assets, are some of the biggest potential users and drivers of blockchain technology. Just in 2018, there's been a lot of activity in the space. Depending on what you're reading when, there's now about 1,600 cryptocurrencies floating around in the wild. 2018 has seen about $14 billion of investments in ICOs, again, depending on what you read. 2018 has seen the rise of the securities token offering. Some optimists in the space have already predicted that securities tokens could represent up to $10 trillion in value by 2021. We've seen several prominent cryptocurrency exchanges make public overtures that they're going to register as broker-dealers. And we've seen significant steps by major financial institutions to announce products and custody services for digital assets aimed at institutional investors. That's all great. However, the regulatory landscape in this space isn't very clear. It's evolving, and practically speaking, I think it's often very difficult to comply with. So I have up here today with me 4 leaders in the fintech space. Each of them and their firms are very active in the trading of digital assets and/or clearance and settlement of securities using and other digital assets using blockchain technology. So without further ado, I'll go ahead and quickly introduce the panel. First, I have up here with me Andy Koslow. Andy is the Executive Vice President of Strategic Transactions, General Counsel for FOLIOfn. He's held previous positions such as GC, Executive Vice President of Strategic Development, COO, Chief Administrative Officer, and Board Director at financial service and technology firms. Up here also with me is Mr. Tom Jessop. Tom is currently the head of corporate business development for Fidelity Investments. In his current role, Tom leads a team that is focused on identifying and executing strategic opportunities, as well as the exploration of emerging technologies. One of the emerging technologies his team is monitoring is the development of digital assets, including the Bitcoin payment system and blockchain. Ms. Colleen Sullivan. Colleen is a co-founder and CEO of CMT Digital, who's been a partner with the broader CMT Group for 5 years. Colleen is also a co-founder and managing member of Sullivan, Wolf, Kalis, a law firm right here in Chicago that specializes in hedge fund, private equity, venture capital, digital assets, and other alternative investments. And last but not least, Richmond. Eric's come all the way in from Canada. He's currently the Director of Business and Legal Affairs at Coinsquare, Canada's premier cryptocurrency trading platform for the trading of Bitcoin, Ether, and other cryptocurrencies. So we should have a lot of good ground to cover this afternoon in the time that we have. So I'm going to go ahead and kick a few questions to our panel, and then I guess we'll be opening up for the audience for questions, comments, and comments. So with that, to start off, I'm hoping each of you can speak a little bit more about your firms and your current emphasis and activities with respect to the trading of digital assets.
Sure, I'll start. So I'm Colleen Sullivan. I'm with CMT Digital. We're a 21-year-old proprietary trading and investments firm, traded in the traditional equities and commodities markets in the United States, Europe, South America, and Asia. We got involved in the crypto space about 5 years ago. We started with investing in Bitcoin, a significant position that we hold today. We then launched a crypto trading desk at the beginning of 2017. We trade globally across spot and derivatives markets. We then started investing in the space in the fall of 2017, primarily investments in operating companies in equity. From a trading standpoint, which I'm sure we'll talk about, it's very different than trading in the traditional markets. Most of the exchanges that we trade on are non-US, non-regulated exchanges. We're also seeing a lot of differences with the technology that we have to integrate with. We're missing a lot of prime infrastructure in this space, which Fidelity is thankfully entering into that piece with their custody solution. But we're missing a lot of different things in the sort of centralized exchange space.
I think everyone in this room knows Fidelity Investments, so I won't bore people with the details. I think a couple of points germane to this conversation is while folks know us as a large asset manager and a large regional broker serving the needs of 1 in 5 U.S. Consumers, we also have a fairly large institutional business. We do business with about 13,000 funds, broker-dealers, and other institutions in existing asset classes. And so a lot of the genesis of thinking about our new business, Fidelity Digital Assets, is really born out of conversations and thinking in that business, married with some of the innovation we do in internal organizations like Fidelity Labs, where for all intents and purposes, we've been incubating R&D in the cryptocurrency and blockchain space since 2014.
There, I'm Eric Richmond, Director of Business and Legal from Coinsquare. So Coinsquare is, and I don't want to use this analogy, but people do, Coinbase in Canada. It's the best way to think about it. We listed 7 different cryptocurrencies on our trading platform. We are client first approach, so we are regulated MSB in Canada, which is akin to money transmission licenses here. Canada's a little easier because you only get 1 license, you need 50 licenses. And we have a regulatory first approach in that. And we are looking to expand further from that. We've announced expansion plans to Europe.
Koslow from FOLIOfn. Our firm is about a 20-year-old firm that was founded with the idea of enabling investors to trade fractional interests in securities and to create baskets of securities that imitate indices or social values. And we've married that to a clearing and custody platform, robo-advisor, other platforms, RIAs. But fast forwarding to digital, we're enabling for via Folio product a number of funds that invest in digital assets, STOs, and we clear custody, handle end-to-end. So,
Colleen, you had mentioned that there's some missing infrastructure here in the space. I'm wondering if you and perhaps other panelists can elaborate on what that might be, what might be missing here.
Sure. So if you think about the way crypto trading platforms work today, you almost have these platforms acting all in one as the exchange, the custodian, the clearing firm, the broker, and the liquidity provider often. There's a reason in our traditional markets that you have those different functions broken out. There's a lot of conflicts associated with having all those activities together. So that's one piece. So when I talk about prime services, I think the best way is to give an example. In the traditional markets, we're used to, as a trading firm, having our assets held with our prime broker. Our prime broker then looks at our positions across the exchanges we trade on an aggregate basis and provides us financing in return. Our counterparty risk is to that one broker. On the crypto side, it's completely different. There's no prime broker in the space. So we have to counterparty with all of the various exchanges that we trade across, and there's more than 200 different crypto trading platforms. So you have to analyze the counterparty risk with each of those, and it's a very inefficient use of coin and capital because nothing's being looked at on an aggregate basis. So when I say we need prime services in the space, it's kind of filling those infrastructure gaps. And I always catch a lot of grief when I say this because we're talking about a decentralized new asset class and I'm calling for centralized infrastructure. However, I think we will end up in a world where you have decentralized and centralized exchanges living side by side. It's just a matter of who can interact on each of those platforms.
And Tom, you spoke briefly about Fidelity Labs, Fidelity Digital Assets, and some of the resources Fidelity has put into the space. Can you speak a little bit more about why Fidelity is so keen on this technology in this space and why they're devoting pretty substantial resources to it?
Yeah, I mean, I think, sorry, a little louder. You know, the company has a pretty long history of innovation, going back decades, and I think, you know, back in 2014, the management of the firm saw this technology and said this really could be quite transformational for financial services, both in terms of everything from financial inclusion and access to improving some of the friction in existing capital markets. And it really began a process that was fairly open-ended in terms of really understanding the technology and its application for our business. So we had teams of developers starting to do some basic engineering. We started mining Bitcoin in 2015, which gave us a good sense of how the network operated, how to think about storage. We airdropped crypto to a number of employees, and they could use it in the cafeteria, which was interesting in hindsight, the most expensive bagel anyone ever ate. And I've had the bagels in the cafeteria, they're not that good. And so, you know, a lot of this thinking, and you know, so we were parallel tracking a lot of the crypto research with what I would call enterprise blockchain, which is how can blockchain technology facilitate better movement of real world assets. And so I think if we put a fine point on all of this, we see a strong business opportunity with institutional clients who now want access to this new asset class. And I think if you're either a venture investor in the space or someone who's just into personally, or you're a firm like Fidelity, kind of your North Star is this idea that many other types of assets will be issued in tokenized format. And what we're building today has far-reaching implications for, you know, our business and other businesses if you believe that. And you know, there's some probability associated with that happening, but you know, it's happening quite quickly, and so we're trying to prepare for that while we're executing on this near-term business opportunity.
And as a corollary to that, and I ask this to you and the other folks in the panel too, in this general space, are there any particular challenges to introducing these products? I mean, I'm thinking of security issues. Anything in particular that jumps out? We could spend an hour talking about that. Yeah, look, at the end of the day, these are digital bearer instruments. I mean, if you lose the keys to the private keys that are associated with these assets, it's as if someone grabbed your wallet, ran out the door, and never to be seen again. So that's a huge part of it. Obviously, as a big enterprise like Fidelity, serving 30 million consumers, 13,000 institutions, $7 trillion in assets under administration, we know something about enterprise cybersecurity, and we've married that knowledge with domain-specific expertise in crypto. That's just one of the issues. There are issues around just basic education. As you can imagine, investors are at very different points on the curve in terms of their understanding. And so I think part of our mission is to also help educate folks not only about what they can do today, but some of the transformational aspects of the underlying technology, which I think is, as much as you're interested in Bitcoin and Ethereum and the price action and the market activity, I think the real long-term story is the underlying technology. And to Eric and Andy, I'll throw the particular challenges question to you guys as well, speaking about your firms, your business.
In terms of regulatory?
In terms of particular issues that are of concern to you guys. And
well, I think Colleen earlier brought up a really good point, which is separating out the services, because right now you have all these services into one kind of function. And we got to take a different approach, which is instead of being that, that current brokerage and then trying to get into the space, we started as that technology company. Yeah, of course, to start off, you're going to build the custody, you're going to build the market making function, you're going to build the quote unquote exchange. And now we're trying to, fit those pieces into the current regulatory environment, splicing that out into It's different pieces. And so having people like Fidelity coming into the space, it really adds legitimacy to the space, and it's something that we really welcome, we're really excited about.
Yeah, and ultimately, there's an interesting difference of opinion between regulators and many people in the blockchain community. What is good custody? Historically, folks in the blockchain community felt that the blockchain is the final arbiter of custody, who owns what security. That's not necessarily what regulators, particularly SEC, think. And so ultimately, interpreting between historical regulators' views and the technology is important. Also understanding the intersection between securities custody and currency custody, and then marrying the two. It's very easy, for example, when you're just going to take dollar funding into purchase an STO. But if you're going to be taking digital currency in, how's that being provided? How's that being reflected out on customer statements as a held away asset? Those are all important issues that regulators want to understand, and it's all occurring in an environment with heightened scrutiny. Right now, NFA, FINRA, they want to know everything about everything that member firms are doing. So you have to think through holistically all the aspects of the clearing, custody, and execution solution across currency, digital, and the tokenized securities.
Got it. Thank you. On that, a couple of you guys have mentioned regulation and compliance and FINRA and all sorts of those good folks. Can each of you speak a little bit about the regulatory issues you guys run up against, and if there's any in particular that are difficult to tangle with?
Sure. I mean, I think it's always helpful to take a bit of a step back and just think about, and I'll just speak to the United States in particular. Eric can definitely speak to Canada, but you just take Bitcoin, and so you've got in 2013, FinCEN said it's a currency. In 2014, the IRS said no, it's property. 2015, the CFTC said no, it's commodity. And then in 2017, the SEC came out and said, well, it's probably not a security, but the other 2,000 crypto assets may be. So when you talk about regulatory unclarity, you have, and I should also add, you have the 50 states that are also going to view this as money transmission, and you need separate licensing depending on what activities you engage in. So when you talk about regulatory clarity or unclarity, just in the U.S., you can see that it's really challenging. Even if people want to comply, but it's really difficult. I guess I'll highlight one thing we see on the investing side. We see a lot of regulatory arbitrage. And I think that that's generally worrisome just from a macro standpoint, that if we want the United States to participate in this new asset class like we did in the internet, it's going to be challenging in an environment where you have entrepreneurs leaving to jurisdictions like Singapore and Switzerland where they can find that regulatory clarity. There's nothing that necessarily physically ties a company to the United States where they can't just go elsewhere. So I do think it's important that we kind of get some more clarity here, just in that regard alone.
Yeah, and to touch on the Canadian space, it is actually, they do follow a lot with the US space. It is a little easier to speak to regulators, it's a smaller environment. Ultimately, I do see the Canadians just following what the SEC will do. But I think you hit the nose on the head, which is really is how do you define what these tokens are? And that's something that I personally at Coinsquare struggle with all the time. Is it a commodity? Is it a property? Is it currency? Is it security? There's really no clarity, and it really is an issue. And regulators just have not made up their minds on what is one and what isn't one. You also have tokens that could be utility tokens, but they ICO'd. So now are they unregistered securities? Who knows? No one really has made up the determination when Ethereum, for example, they ICO'd. Were they a security when they ICO'd? And now are they a utility? That's kind of what the SEC is saying. But when does that happen? And there's a lot of unclarity there. And so where do you draw the line of what is a currency and what is a security? And that's just something that being as a regulated MSP in Canada and even all the other exchanges operating in the U.S. struggle with on a day-to-day basis is what can I list?
And Eric, You had mentioned that your firm was looking into coming into the U.S. Has this been one of the barriers? From your perception, is there more uncertainty in the U.S. than there might be in Canada?
Not in particular. The main barriers, I mean, regulatory, not just on this point, but regulatory in general is always the biggest barrier right now. So there's just a lot of unclarity. Markets like the U.S., markets like Europe, you don't want to take the wrong step when you're entering those markets because the repercussions can be big.
This is what I would say. I've spoken recently with senior CFTC folks and SEC folks in connection with our products. Is that in a number of key areas, regulators are taking a pause. There are going to be slight steps forward, but they're taking a wait-and-see approach on many new products. You've seen that from SEC in terms of funds over the summer. For some cases in currency, you can look to the past to figure out where regulators will go. CFTC has been much more welcoming and forward-thinking on currency compared historically, and traditional currency compared with SEC. And you can imagine that where states are not intersecting, that among the federal regulators, that will continue to be the case even in the digital world. But I think we can all expect a decent amount of pause as regulators continue to grapple with the technology, with concerns that they have about it reaching out more and more to retail and, under existing regulatory regimes. But they want to be careful.
And I'll just say, as an attorney, we occasionally have calls with folks, some of the big wigs in places like the SEC, on behalf of clients, and they basically admit they don't really know either, where they say they'll get back to you because you raised a good question, and they may or may not. So I think for all of us who are struggling with it, I think the powers that be are as well.
Can I just add one thing, because I want to come back to something that Colleen said, which is this idea that there's this 21st century modern technology, and the current form factor is centralized infrastructure, exchanges, futures on Bitcoin, custody, and I think a lot of the regulatory discussion now is it a security or not a security, but I don't think the regulators have actually begun to think through the ramifications of all the new capabilities that the technology brings, and I think for those of us in the industry that want to see this move forward, we're going to have to figure out how to move the discussion to a deeper level. And to your point, it's going to require a lot of engagement and education.
Sure.
I'm just going to add something there too, because I think it's important. And when we talk about kind of the infrastructure that we need in that crypto sort of centralized exchange space, I think it's important that I don't think we're saying that you kind of copy and paste the existing infrastructure over. Because what Tom just said, we've got this great technology, and we can use that technology to make that infrastructure better. We can have more efficient markets, we can have more transparency. So I think just using the technology itself can really be reforming for our financial markets.
And the one thing I'd add to that as well is regulators are actually in a really tricky position because all they're doing is applying the law that was given to them. So they're trying to apply something to technology which doesn't really fit the whole. So it's how do you fit the square peg in the round hole? It's the argument. So really, does it need to go up the chain? Does there need to be a change to the actual law to properly regulate this industry? And that's still a question that needs to be decided.
As an acquaintance of mine says, in this space, the regulators are almost like the NFL referees. Everyone gets mad at them, but their job is to throw the flags when they see them, and they always, it's a hard thing to do here.
And they can't go beyond their authority. So, for example, people will say to CFTC, well, why aren't you reaching out to spot currency, as opposed to, where they're traditionally regulated? And also, they have very limited authority to reach out, beyond where they are, and they need to be careful. Ultimately, one of the points that the regulatory group that I was with when we were meeting with CFTC said, if you're not making those decisions and providing the guidance, the market is going to move ahead, but maybe we'll move ahead in ways that are unanticipated and may not always have the results you desire. But I think the pace that they've indicated they're on is the pace we can expect to see over the next year.
I agree. Well, I got 5. Looks like we got our looks like we might be about out of time, so.
So how about a hand for Peter and his team?